Now in that background, let's quickly look at the rules of fungibility, which basically means which credits will get adjusted against which taxes. And when I'm presenting this slide, please note that what we are talking about here will apply for each state where you have obtained a registration. So if you have registration in 5 states, you will have 5 similar slides. So what happens is, during the month you keep on paying taxes on expenses, and the vendors will charge you C plus S GST or charge you I GST, which will come in your credit receivable accounts in your books. Necessarily you will have to have these 3 credit accounts. Today you have just one SENVAT credit account and maybe one VAT account. Instead of that, you will have these 3 credit accounts as GL codes. You will have a CGST receivable, IGST receivable and SGST receivable. Each of them will have some balance, and on the revenues, on the incomes, you will have similarly C plus S or I payable. So you will have 3 output taxes payable. Now what you will do is, you will then try to apply the rules of priority and adjust the taxes, input taxes against the output taxes. So the first rule of priority is like against like. CGST shall be adjusted against C, I against I and S against S. No, it will come. That's the second rule. So first rule is pehle ye kar lo. After this, if there is still something left in C, I or S baskets, the above ones, then the second rule comes. The second rule says C against I against C. Right? So that is the second rule. You can't use the second rule before completing the first rule. And thereafter you have the third rule. If after this also something is left over, you have a third rule which says I against S and S against I. Right? Please note, S cannot be adjusted against C, C cannot be adjusted against S. Okay? So these are the 3 rules of priority. And when you look at this overall matrix, you will find that I is preferable because I can be adjusted against C, I and S. I first, then C, then S. But I is a tax which gets adjusted against all the 3. So if you are in a specific type of a situation, you may prefer interstate procurement over domestic procurement. It may make sense to buy from another state rather than buy from the same state, because if you buy from the same state, you have only 2 levels of adjustment available. But if you buy from another state, you have all the 3 levels of adjustment available to you. Of course, it might be in a very, very specific situation that you may like to look at it. But yes, this is the rule vis-a-vis each of the states. Now when you compare that with multiple states, you might end up in a situation where you have taxes in one state and credits lying in a corporate office or in the head office. So the government says you can obtain a registration known as input service distributor registration, and through the input service distributor you can transfer the credits from the head office to the respective states in the ratio of their turnovers. Okay? So depending on the turnover of the receiving states, you can transfer the credits from the head office to the receiving branches. Now here we have an interesting proposition. The transfer will be through the concept of IGST. So what typically happens is, when we saw the earlier slide, we said that S is not adjustable against C, C is not adjustable against S. Now through this concept of ISD, what can happen is, you can have a C or an S in the head office, you will transfer it through ISD, and that transfer is through the concept of IGST. So you might have a CGST credit here, it might flow through ISD as an IGST into this basket, and then this CGST becomes IGST here, and that IGST can be adjusted against SGST. So in a way, there is, while we say these are 2 compartments, C and S, and both of them are not adjustable against each other, somewhere ISD presents an opportunity to transfer CGST of one state and adjust it against the SGST of another state. But yes, this is one opportunity which one may be looking at some point of time. So that is on the fungibility aspect, what credits can get adjusted against what.